oil-producing countries, including Saudi Arabia and Russia, have agreed to cut oil production by 2 million barrels a day.
The objective behind the cuts is clear. OPEC Plus wants the prices to rise. And there is one superpower that is going to feel the pinch more than the rest.
President Biden says there will be consequences for Saudi Arabia.
Chairman of the Senate Foreign Relations Committee vows to block all future weapons sales to Saudi Arabia.
The White House says a decision by OPEC Plus to cut oil production is a clear sign the group is aligning with Russia.
Guys, again, it's Andrea. The market are wild, guys. Like, a lot is happening, so we need to have a family meeting because the market are wild.
OPEC, the Organization of Petroleum Exporting Countries, has announced it will cut back production by 2 million barrels a day.
We're setting the table here for a monster cut of 2 million barrels a day.
The oil cartel led by Saudi Arabia announced a cut of 2 million barrels per day.
Oil jumped this morning as OPEC Plus mulls a cut in production.
This will be the first major OPEC Plus cut since 2020 when oil prices went negative.
President Biden says there will be consequences for Saudi Arabia after the kingdom sided with other oil-producing countries to significantly cut production.
Now, to understand the situation in 2022, let's take a look at this chart. This is the international benchmark for measuring oil prices. At the start of 2022, Brent prices were close to $79 per barrel. Then suddenly, after the Russian invasion of Ukraine, it suddenly increased to $110 per barrel. This was the highest mark in the past 14 years. Why? Because Russia is the third largest oil producer in the world. So when sanctions are applied against Russia, it led to decrease in supply and increase in demand. So for the next few months till June, July, it continued to remain above $100. This is what caused a ripple effect of inflation all across the world. Why? Because when the oil price increases, it increases the energy bill of the factories, that increases the cost of production and transport, eventually causing the commodity prices to increase. This is how oil prices and production affect common people like you and me. If this is very clear to you, let's get back to the oil prices. If you look at this graph, since July, we started seeing a general reduction in the price of oil, and by the end of September, prices had fallen to $85 per barrel, which was the same as the price before Russia-Ukraine war. And this is where most of the people thought the situation had become normal. But the catch over here is that in 2021 itself, we saw a significant increase in prices because the world economy was bouncing back. So $85 per barrel was not normal costing, it was already a steep increase from the pre-pandemic levels. In fact, immediately after the pandemic, the oil price shot up from close to $20 per barrel to $85 per barrel. And then, after the war, it spiked to $110 per barrel. So from the perspective of the oil producers, the $85 per barrel in 2021 was great because it was a big increase on the previous COVID months. But right now, the prices are declining from what it was during the war. So now, oil producers are concerned that if this decline continues and then the world goes into a global recession as expected, just like oil prices dropped to $20 per barrel during the COVID, when recession arrives in 2023 again, the demand for oil will go down and they will again have to sell oil at a dirt cheap price of $20 to $30 per barrel. This is the reason why now OPEC Plus has cut their production by 2%. And just as expected, immediately after the announcement, the price of oil rose from 1.7%, going from $91 to $93 per barrel. This is how the OPEC Plus group uses its oil monopoly to dominate the global economy. And this is where the United States has a problem for three discrete reasons. First of all, the situation in Europe is getting worse. And like we saw in the previous episodes, if their energy bills go higher, the government needs to borrow more money, which means more bonds will be issued in the market, which means less demand for the bonds, leading to higher interest rate of bonds. And this eventually kicks in investor pessimism, eventually reducing the value of the currency, which again increases the energy bills. But this time, it's not just because of Russia, not just because of currency depreciation, but also because OPEC Plus has reduced the oil supply, which is now increasing prices. Secondly, for the US, there is already a cost of living crisis with its inflation already touching 8.3%. And if you see, it is the highest inflation rate in the past 40 years. So if you see what's happening, oil price going up is a major factor that causes recession, and the OPEC is worried that recession might come, so they are increasing oil prices, which again increases the probability of recession. And thirdly, When the oil price shoots up, Russia makes more money, which gives it more resources to fight the war. And this is the reason why, again, the US has a problem. Now, economizing energy.
President Biden is warning that Saudi Arabia will face consequences after OPEC last week announced a major cut in oil production.
I'm not going to get into what I'd consider and what I have in mind, but there will be consequences.
White House officials say higher oil prices will help Russia, an OPEC member country, finance its war in Ukraine. And the president indicated Congress will take action when it's back in session.